Welcome, FAM Mortgage Advisors, to our fifth interview with Funding Billions with Finolio. Today, our guest is Jim Kabellis. Hopefully I said that right. Might have screwed it up, but I love you. You got it. Jim's based out of the San Diego branch in Escondido. If you guys don't know where that is, it's beautiful. SeaWorld's pretty close by. What else is there? You got the San Diego Zoo.
You got the Wild Animal Park.
Wild Animal Park. There you go. Well, Jim, before we jump into this, let's start with this. So you joined Skyline in 2014. You've been with us the whole time. And I just kind of want to read out your numbers real quick, and then we'll really dive in. So 2018, you did 38 units for 15 million. 2019, you did 60 loans for 27 million. And then 2020, you did 160 loans for 75 million. How did you go from average Joe to an overnight superstar? And then we'll get into the questions.
Sounds good, Chris. Thanks so much for having me, first off. And a key thing happened to me at the end of 2019 with regards to my focus and my mindset. The issue I was always having with focusing on goal setting and production numbers before the beginning of the following year, I was always saying, I got to hit this number, I got to hit that number. And when I found that I was focusing too much on the numbers, and I said, at the end of 2019, I said, screw the numbers. I'm going to focus on helping as many people as I can in 2020, and doing that by creating and having the most efficient system that I can.
I like it.
And stopped focusing on the numbers, and all of a sudden the numbers took care of themselves.
Yeah, every year my goal is only to do 60 million. And then anything over that, I'm just super happy, right? So that's my goal.
I love that.
60 million, I'm great. Anything above that, I know I did a good job. So let's start. A little background. How long have you been in lending? Brief history, where you worked, how you ended up here. Why don't we start there?
Sure. Interesting background for me anyway. I started learning this business from the back forward. So I started in 95 as a CFO of a small lender here in San Diego that focused on Title I loans. And if you remember, 125s, loans that went to 125 CLTV. Yeah. And I did that for 10 years and kind of learned the back end of a mortgage business by setting up warehouse lines, selling loans, and funding loans.
Oh, wow.
And then in 2004, I went on my own and started my own mortgage bank.
Okay.
Did that at a really crappy time when the mortgage meltdown hit in 2007, 2008, closed that up, and then brokered for a little bit until 2010, and I opened a branch for Cherry Creek, and then ultimately Skyline in 2014 for Bill Tesser and Bill Dallas.
Okay. You've been with us a long time. Great. Yeah. So let's start with, what does the team look like? Assistants, processors, LOAs, marketing. Let's give us an overview, because you can't go from 60 to 160 without support, period. Yeah. That just isn't, and you can't do that.
It doesn't happen. Yeah, it doesn't happen without support. And I got a great team. My processor has been with me for 14 years. She started out as a receptionist for me back in 2007. And although I share her now and she processes for others, she and I have always been on the same page. She was my LOA before she became processor, so she knows how I work. She knows the system. I have a LOA that has been with me 9 years. And again, long-term, great lady in my right arm. And then at the end of last year, I hired a part-time marketing assistant to help me mine my database and really focusing on getting more involved in social media and in implementing a program that I invested in last year called Art of Home Ownership.
Okay. Yeah. I've heard of it. I've heard of the Art of Home Ownership. So
that's my team. That is my team, and I get fulfilled by the RB branch, and that fulfillment team is awesome. Love the underwriting staff. Pam, Taylor, Craig, they take great care of me when it comes to taking care of my clients.
Yeah, you have 1 day underwriting turn times, right? Well, I have to deal with 5 or 10. Okay.
They're quick.
I know how that goes. San Diego people are so spoiled.
Yeah, it's right.
All right. So what's your goal this year? I mean, do you have a number, or you just want to, the mindset, I'm just going to help as many people and it's just going to
Yeah,
follow?
the mindset is still the same, help as many
Okay.
people as possible. So I'm not focusing on a number, although, after the first quarter, I'll probably land somewhere between 70 and 100 this year.
Wow.
Yeah.
It's crazy. That's what a, I mean, if you look back at 18 and then you look at 20, yeah, look, rates drop, but still, even with rates dropping, if you're a $15 million producer and you refi everyone, there's $15 million. And then you do
Right.
purchase business, there's another 15. Everyone kind of doubled their business. Like you quadrupled yours, which is crazy good. So,
Thank
hey,
you.
mindset, whatever you're drinking, everyone else needs to drink it as well.
Yeah.
So, yeah, I was going to ask you, how about this? Every goal for LOs is to develop purchase business.
Yep.
Like, how is that? How do you get that going? And what does it look like? Right?
Yeah,
Let's start there.
great question. And just to give you an idea, my purchase business has been anywhere from a low of 25% to a high of 67% of my production each year. And I'd like to keep it, I'd like to keep it up towards that 35 to 40%, and obviously higher when refis are going away. But the first thing I think was being available to realtors when they call, pick up the phone, answer the phone, simple thought. The other thing I did early on, Chris, was I incubated purchase leads for realtors that had buyers that weren't ready right now.
So you have a really good follow-up system then.
Yeah, and I have a good system where I can identify, obviously, pretty quickly what's their issue as far as why they can't qualify, and then be able to work with them over 45 to 90 days. And there's nothing better than being able to send a realtor back an incubated buyer that's now ready to purchase that they had completely forgotten about.
What system are you using? CRM?
So I'm using 2XM obviously, and doing it with that. But back before that, I was using a program called Path to Buy.
Okay.
Yep.
Okay. And it goes, and and it's great. You guys are easily following up. Are you doing the task and stuff? Are you using all that stuff in there?
Yeah, we're using the tasks. We're
Good.
using a 30-day callback regarding checking in making sure someone has either done what they're supposed to regarding their credit, paid off any debts that they were going to be paying off, and tracking how their income is looking this year.
So let's go into this. So when you meet with realtors, right, and you're like, hey, give me all your open house leads, give me anyone you know, give me anyone in your database. I will call them, I will harass them, I will handle them. And then when they're ready, I'm just going to refer them back to you. Hey, that's great.
They listen. Yeah, at least they give me a shot at that. And obviously they have a current lender, but when you can give a realtor back a lead that they had forgotten about, that's found money for them. Mm-hmm. And it leaves an impact.
So one thing you mentioned that I haven't talked about on our interviews is you answer your phone. And when I started in this business, like I built a name for answering my phone. I had a call yesterday and I answered on the first ring, and she's one of my good producers. So I usually can put her to voicemail, right? Because I have that relationship. Right. And she goes, "Oh, Mr. Fenolio, I got you on the first ring." She's like the old days.
Oh my God. And look at Chris, that's amazing, because the numbers that you're doing and you still pick up the phone right away, that just leaves an impression. And I just found that simple act sets you apart from others.
It does. So when I was starting and before I got bigger, right, when I was, I don't know, in the 30, 40, 50, 60 million range, I used to tell people, I don't leave my desk. I go, I'm chained to my desk. You should send me an email, I'll reply back in 1 minute. And people will tell you that in our company right now. They're like, I send Fenolio an email, he replies back in 30 seconds. Because I manage, like a lot of people say they don't like to manage with like having their email. I manage that because that communication there actually goes a long ways. Clients love that. And the other thing is picking up your phone. I used to tell everyone, you know how you do really well? Just answer your phone.
Exactly.
The number one complaint a realtor would say to me is, I can never get a hold of my person.
Same, same.
And that always set in early. I was like, oh, that's easy. I can do that.
I could
And
exactly.
it was great was, when I was really trying to prospect and grow my business, one of the things was, you'd always have to try to go smooth them, right? And I took this line, I go, look, I can go take you to lunch, spend 2 hours with you, but then anyone calling me is going to get the red button, or I'm not going to pay attention to them. And what if you were the one that was one of my partners calling me? Wouldn't you rather me not being at lunch and screwing around and whatever and trying to prospect? Wouldn't you rather me just answer my phone and be behind my desk? And so I always avoided having to go in lunch with them. I used to kill it, like do a really good job, have a follow-up call, and let's meet. And then I'm like, do you really want me to meet, or do you want me to answer your phone like I'm doing right now? And it literally worked. I was like, oh, I saved myself $50, and I didn't have to go spend 2 hours with them to hear, them talk about themselves the whole time, right?
Exactly. I think you're hitting gold there. And I have a similar approach where I try to respond to emails right away, solve issues right away, and answer questions right away. And it is just amazing how people appreciate that and how it's not done by most people.
Yeah, no one could get a hold of their lender. Now, look, 2020, I was very selective on the phone calls I answered, right? Because it rang all day. But there was the ones where I knew I was like, all right, I got to take this one. This one, we can listen to that voicemail to see what it is, who it is, what it is. But I would get back to them like within minutes. I just didn't want to answer it, right? But I 100%, if you're new in the business, number one thing, answer your stupid phone and answer it on the first ring. Okay. Don't let it go. And so I agree with you on that one.
Yep. Exactly.
Let's talk about this. Where do you get most of the purchase business from? Is it, give
so
us
about 75% from realtors.
Okay.
About 5% from 2 real estate attorneys that I've developed a really good relationship with. And then the other 20%, I've got 2 companies that I have basically become the unofficial in-house mortgage advisor for them.
Guru.
Yeah, just because I've helped all of the executives in both companies, and they've told everyone that have asked them. So it's funny because I know their payroll systems better than the employees do when I get pay stubs and W-2s and figure that out. So that, believe it or not, comes 20% of my business, and most of that business, Chris, I end up referring back to my top realtors because they don't have a realtor.
Oh,
so
wow.
that's another thing.
You're a gold mine to a realtor.
Yeah, last year I sent 10 pre-approved buyers to my top 3 realtors.
Wow, they love you.
And they were
You're
just
there you go. Thank you. That's a relationship. That is what we're building here. That is awesome.
Yep.
Talk about the real estate attorneys. I haven't heard this one before. Are they like divorce attorneys? What are they?
Yeah, so a couple of them were handling divorces. A couple of them were handling we're handling deaths of relatives or deaths of a spouse and needed to sell and buy. A couple of them were from another country, from another country, and we tried to figure out how to get loans for non-residents.
Non-resident aliens. Yeah, got it. Okay. Yeah. I mean, I do think that's underutilized is our other aspects of our business is where else can we get referrals? Right. And I think a lot of us are afraid to deal with divorce attorneys and other aspects, CPAs, financial advisors. And I know you and I chatted, 2 days ago, just to have a quick conversation. You said one of your strategies are CPAs. Can you talk about that?
Yeah, so CPAs, I've got really good relationships with 3 CPAs that have helped handle my businesses over the past, and have also just been friends and relationships. And every single one of them, I probably get at least 5 to 8 opportunities from them every year with regards to their self-employed borrowers. Yeah. Just because I understand how to review tax returns, financial statements, and a lot of them are struggling with that right now. And then the other thing that we talked about, I can't believe how many opportunities I've gotten from financial planners. Yes. Over the last year. You had told me your number and it blew me away. I counted mine after that, and it was 20 loans last year.
Yeah. crazy. Yeah, we talked about it on episode 4 that I don't know, probably airs in a month. But yeah, how many I got from one financial advisor, and it was insane. And like I text in with him almost daily now.
Is that right?
I'm like, you are the best referrals. And I even tell him, I'm like, you're amazing. And I go, now I know you hang out with other people like you. So can you invite me over when you're like, you know, because he does. And I'm like, and so I got invited to one of his events, and I'm like, I need to hang out with your people, because your people, like, right, you hang out with the 5 closest people in your life. That's kind of who you end up being, right? And I'm like, I want to be with your group, because that group's going to help pull me up.
Exactly. So, same thing. Yeah, same thing. So one of the things that I kind of made him aware of, that, believe it or not, he wasn't aware of, is that, you know, if his borrowers are over 59 and a half and they have qualified retirement funds, we use that as qualifying income. And when I turned him on to that, it just opened the floodgates.
Yeah, no, it's helped me. My guy knows, he's smart and he knows that. And that's one of the things. He goes, hey, he'll send me a text. Not much income, but I got 500,000 in an IRA.
Right.
What do we got to do? Because they need a loan, right? And I don't want them taking the money and paying cash.
Exactly. We want to preserve their assets in place, right?
Yep, 100%. So great way. Yep. So one thing you talked about was your process. I could tell you're a technician, right? You owned a mortgage company. So obviously you're like me, you're a geek when it comes to numbers and tax returns and S Corp versus a C Corp versus a Schedule C and what they're writing off. And line 17 on the S Corp is, you know, if you get that, you could be in trouble. But if it's
loans payable less than a year.
All right. Yeah. So it's very rare. I mean, a lot of people are hunters and skinners, and some are not. Like, I'm a technician. I know how to put any loan down. Like, you come in, I will figure out what I'm going to do with that. I may not be the most friendliest, but I can close your loan, right? That's all I care about is, hey, look, here's what we're going to do, and this is how you're going to go, and you just got to go with me. So that sounds like you and I are very aligned, similar to that.
Yeah.
Now, let's talk about the process. How involved are you after? Because I assume you're looking at your own income, you're dialing it in, and you're setting it off to your assistant and processor who've been with you for years. How involved are you from there?
So it's really, my involvement is all on the front end.
Okay.
And I'm happy to say that probably 99% of the loans that I put in process fund.
Good.
So I don't have to worry about it, but I spend a ton of time on the front end. First conversation, as you've shared in some of your other interviews, I'm going deep in the relationship.
100%.
I am going deep in, who's your CPA. If it's not someone I'm working with, I'm trying to find out if it can be someone I'm working with. Who is their financial planner? Do they have a trust?
Yeah.
Do they need do they need a trust? I'm really kind of uncovering everything about them that I can utilize to help add value to them. Yeah. Then I am structuring that thing in that conversation. And then after that conversation and letting them know that here's how I plan on structuring, but here's what I need. And I need everything immediately, and I need it up front if they want to work with me.
100%.
And then get everything up front. I do my own income calcs. I do my own structuring. And then once I know I've got it, hand it off to my LOA, disclose, or the appraisal, and
you're off running.
Yeah.
And so
and
you don't have closing issues, you don't have files blown up in your face. And look, the way I've been taught was being a structurer. The way I've taught my group is to be structurers, right? I go, this is it right here. This is what you're going to do. And then, how you dive in, right? About going in and CPA and this and this and this, I guarantee you don't get rate chop. No, I guarantee people don't walk on you because you're putting so much up front. You're saving yourself time. Yeah. You're saving yourself pain. You're getting it all done, getting it over with. And then they look at you and they're like, you're not a used car salesman. You're a freaking expert. You're a guru. And they're not going to go harass you for an eighth because so on an online banking, blah, 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 said they're an eighth lower, right? And that's the part where it's really hard is, getting our group, Finance America, to be advisors and gurus versus, hey, here's a 30-year fix, here's my rate. They got no relationship. They don't care. I don't blame them. Go rate shop. The guy didn't do anything, or the guy didn't help you. That's
exactly.
You're selling exactly what, and it's not even selling. You're providing service. You're giving a service that is required in this industry. And the one thing you did mention, the art of home ownership. I've heard of it. You want to dive into that one at all, or do you want to skip that one?
A little bit, just because I believe it's where I want my practice to go in terms of it's all about adding value and being the main center of influence to our customers, so that I can make sure that I can anticipate transactions based on what's going on in their life and what their short and long-term financial plans are. And the idea is if I can do that, I can monetize this business and eventually either pass it down to somebody or sell it and monetize our business, because a lot of times we don't monetize our business and our practice when it's time to go to the next challenge or the next thing we want to do in life. And I'm a lot closer to that stage than you are, but it's something I've been thinking about, and all these years I've put in. I want to make sure that there is value on that end when I decide to run off and do something different. So that's the kind of in summary.
Yeah, you still got a few years left.
I'm not going anywhere.
Yeah, I can tell you're having fun.
I'm enjoying it. And I was going to share with regard to those conversations with clients. I got the best compliment from a client last week when he said, Jim, every time I talk to you, I feel like I'm getting a master's degree in mortgage finance. And I'm like, I want to teach, I want to coach, I want to help people. And that's what gets me up every morning. That's what excites me about the business.
Perfect. All right. Jim, do you follow any mortgage podcasts? Do you have any coaches? Let's talk about a little bit of that.
Yep. So my big, at least tools anyway, that I use are mortgage coach, and I use MBS Highway on every transaction. Every transaction. If it's not MBS Highway quote, it's a total cost analysis, and it always goes to the realtor and the customer.
So you include the realtor. That's smart.
I include the realtor on all of those so that they understand my strategy, and they understand that they're not going to get this from other lenders. I'm a big coaching. I say proponent or client of Jim Rohn, who is now deceased, but I listen to all this stuff. Darren Hardy, and a big follower of Wayne Dyer, who is also passed, just on balance in life, Chris, and focusing on, again, service, focusing on helping people as opposed to what's in it for me, because what's in it for me takes care of itself when I help people.
Yeah, I loved your mindset when we talked for 2 minutes and you said, it's all about how many people can I serve? And that's the mentality we need to take going into this. And look, we're going to do a lot of stuff that doesn't end up in a paycheck, but there's going to be a lot of stuff that ends up in a paycheck that we didn't work really hard to get that paycheck. So it always balances out. Yeah. And so those are the things that, I always tell everyone. It's like, it's give, right? Yes. It's not take. And that's the biggest thing that a lot of loan officers starting off, they got to get that paycheck, right? But they got to understand they got to give first. Yeah. So let's flip gears. What are you having the biggest challenge, pain in the marketplace, products? What is your biggest pet peeve, something burning you right now?
So burning me right now is how self-employed borrowers are being treated by guidelines.
50% of my business is self-employed.
Same here. Same here. Okay. And at the same time, as it's a challenge, it's probably one of my biggest assets as well.
Yeah. Because everyone comes to me.
Yeah, I've gotten so many deals from, for example, guaranteed rate. They don't want to do self-employed borrowers. Rocket Mortgage does not want to do self-employed
No,
borrowers. They got
yeah.
enough W-2 borrowers that they don't want to deal with it. And I've helped so many people that have been referred to me because they weren't getting taken care of or getting help, or no one wanted to dig into the tax returns and help them with the financials and do what it takes to get these people that are worthy of a loan approved.
Yeah, our industry is definitely struggling with self-employed. I do feel we just beat the snot out of them.
Yeah.
And, you know, for you and I, it just gives us more business. I mean, if self-employed was easy and every person could do it, yeah, you know, so it comes with the good and the bad, but being a technician like separates us. And you're right. Had a client referred to me whose current servicer recalled for a rate and term refi is like 499. I was teasing him like, you missed the boat, but you're still worth it, right?
Right.
I go, what took you so long? He goes, well, I'm self-employed. And I called my current servicer and they said they don't do self-employed loans. I don't know who his servicer was at that time. And I started laughing. And then as I dig into it, the wife makes, you know, 6 figures and I don't even need his income. And I was like, well, do you want to go through the exercise or not? Or we could just put you on there at 0 income and we just use your wife's W-2 income and you totally qualify. And he's like, well, why'd they say that? And I'm like, I don't know, but hey, I'm here to help you.
Exactly.
So,
It's so cool. And that also, I think, back to the new loan officers, you got to know how to do income.
yeah.
You just got to, because it takes away 50, if not more % of the stress.
Well, I mean, honestly, it's a worksheet now. I mean, it's dummy proof.
Yes. Yeah.
It's
So I think
dummy
that's important.
Let's go with this. What tips do you have for other loan officers starting up? I'm brand new, Jim. What do I got to do?
Like I said, first, you got to answer the phone.
Okay. I love that.
Don't worry about production numbers. Just focus on at bats. Focus on talking to people and finding out how you can help somebody. Okay. Third, give bad news fast.
100%.
And follow it with prospective solutions. Yep. Treat your team and treat your fulfillment staff with respect and gratitude. They got tough jobs. They got a lot of volume. Really, really put them on a pedestal, because without them, we can't do what we do. Take ownership. Take ownership of everything. Shit, my team, they blame me for everything, and I take it. I take the blame for everything because it's my name on the loan. So I think if, as a new loan officer, if you realize that you're the quarterback, you're going to get all of the praise and you're going to get all the blame when the shit doesn't work.
Yeah.
So know that up front and welcome it. Welcome it. And the last thing I think, know your guidelines. Yep. Know your guidelines. I recommend all new loan officers print out guidelines once a week, print out one set and take them home and study them over the weekend. And if you do that every weekend, after 15, 20 weeks, you're going to know everything we do, or every guideline that we have.
100%. I love it. These are great. These are great tips, fam loan officers. Hopefully you're all listening, you're paying attention. This is a guy that went from 30 million to 75 million, like overnight, which all of you want to do that, which is probably set yourself up to fail. But hey, look, these are great stuff. This is stuff that I practice. A lot of, Jim, you and I are aligned on a lot of things here. Last question for you. What do you have for me? What kind of question do you want to ask me?
I got one for you, and I'm hoping you like it and have something for me. So what do you see as the next big change or development in our industry, and how do we get ahead of it and take advantage of it?
Okay, there's a lot of change coming, I feel, but let's start with the realtor side. Have you had any Zillow transactions yet?
Nope.
Had 4 this month.
Wow.
Zillow sold the house. Zillow also represented the buyer. Zillow has its own escrow company. Zillow has its own purchase contract.
Wow.
Borrowers found it on Zillow. There's technically a Zillow agent who, by the way, took a $3,000 commission. Never heard from, never talked to, never heard of it. Borrower goes, Chris, I'm finally in escrow. Here's my purchase contract. I'm like, what is this? And they bought it direct.
Wow.
4 of them this month. So there's some change coming. There's some change. The buyers are going direct. So what do we do? We got to get to the buyers first now.
Got it.
Think about that. Think about that. I had 4 transactions where the buyer saw it on Redfin, Open Door, Zillow, went through them directly. They handled it. Do you think they were, oh, and 2 of them the Zillow people try to have them cross-approve with the Zillow mortgage people and do the whole thing. They wanted the whole thing.
Wow.
So be prepared for that. I think, I don't think that's going away. I think you're going to see more increase of that type of stuff for our industry. But as a mortgage advisor, they're not going to want to deal with an 800 number person that, you know what I mean? And I have a pretty cool letter or email that I send out that I'm basically fighting for them, and they need someone in their corner, especially if the agent, the Zillow agent's double ending it, Zillow escrow, Zillow contract, they have 0 protection.
So were you able to do your same kind of capturing of the client and really showing what you can do and adding value for them in that scenario?
The good news for me, all 4 of them were already pre-approved with me. So they already loved me. It wasn't like they were in escrow and they found me. So they already knew, and they were like, oh, I'm using him, blah, blah, blah. Right. But when I got them, I was like, holy smokes, how many buyers are you pre-approving that are going and getting double-ended by a Zillow, Redfin, or whatever? They have their own escrow company, their own agent, and you don't know anything about it, and you lost those clients.
Got it. That's great to know.
I think we're going to see a lot more of that. I think we're going to see a ton more of that. People are not realizing that. So that makes me nervous for our realtor partners, and they got to have a value proposition. But how do they stop them from going online and seeing an open house? You know what I mean? Seeing a new listing coming soon, and they click a button, it takes them right to it, and they go, here, put your offer in.
So that's interesting. That's a great point, and something I definitely have to look at.
Yeah, definitely. So Jim, you're awesome. Let's start with the tip of the week, I guess, or every other week, I guess I'm doing these interviews. So FAM loan officers, got to leave you with the best tip that I've seen is easy jumbo. By the time this comes out, it's probably a month from now, but as of yesterday, I believe it's out, and all of you need to take the training. I had a little sneak peek back scenes of this product. I had a conference call. It was really, really great. This is going, Jim, answers your question, solves my question, your question, when we are our pain in the challenge of the market as self-employed borrowers is now we can run DU. Well, what does that mean? I get to run DU. Well, what it means is I have a self-employed borrower. They've been self-employed for 20 years and I run DU. Well, they've been self-employed for 20 plus years. There's a 99% chance DU is going to say, if you've been self-employed for longer than 5 years, you need to show 1 year tax return.
Yep.
That is going to be a game changer, huge game changer for Finance of America. Next, reserves. I had a DU file on a bigger loan and I couldn't believe this product was out. And I sent it to Mike Potter and I go, Mike, this is a $1.8 million deal. I needed 24 months reserves.
Yep.
I ran DU on the file just because I'm already closing it, but I sent it to him. I go, Mike, this says no reserves required. And Mike Potter, and he goes, Chris, you could go easy jumbo and not have to provide any reserves. And I almost fell out of my chair.
Yep.
There's a $1.8 million loan.
No reserves.
No reserves. I'm like, okay, this is great. The other thing is you got Schedule E income, Fannie and Freddie worksheets, right? You just go off of that. You don't need to get lease agreements. You don't need to deal with that stuff. I think, Jim, the mortgage industry is figuring out that we are beating the crap out of self-employed borrowers, and products like this are going to start coming out more and more. And I think this is what we got to embrace. And what you said, you got to listen. FAM spends all this money in marketing to train you guys, and they roll out something and freaking 50 people sign up. You're like, guys, we have 500 of us. We need to all 500 be on there and learn this product and sell this product. This will separate us from everyone else and give us better it makes us better. And then we're going to grow our business. Every transaction you close, you have an opportunity to get 3 more deals, 100%. So
Exactly.
that's what I'm going to leave you guys with.
Yep.
Anything else, Jim, you want to do? Yeah,
to
go for it.
piggyback on that, Chris, I got 2 easy jumbo pre-approvals this week for purchases, just because of that, the DU findings and no reserves.
Yeah, it's great.
Amazing.
It's great. Well, Jim, thanks again. This is Funding Billions with Fenolio. I'm Chris Fenolio of Finance America. Our next interview will be coming out in a couple weeks. Thank you guys for joining. Everyone subscribe. Follow me on Instagram, Facebook. I'll put it all below. I will talk to you guys soon.
Thanks, Chris.
Thanks.